Last week was brutal. This week, maybe a little less so, or maybe we're starting on a slightly easier path. It is Veterans Day in the United States, but still feels like there's some momentum behind some of these trades. Bitcoin's certainly sending that signal.
Yeah, absolutely. I mean, sort of blowing past 81,000 today. I think we're kind of seeing people trading off thoughts and promises from the campaign trail at the moment. So there's going to be a question of how much of this kind of becomes reality and how much more can we actually see before Trump really takes office and is in a position to sort of start outlining the kind of policy and law implications behind some of the talk that we've seen. So, I mean, last week we saw on the Treasury side, as you mentioned, we saw huge volatility. We saw kind of people paring back the Trump trade, putting it back on, paring it back again. I think we're going to see a lot of that kind of volatility, and volatility kind of become the name of the game as everybody is still trying to trade off the signals that are coming out rather than the actual policy and actions that really come to pass.
A lot of the conversation is that yields are ultimately going to hit 5%. That's almost building into a consensus story. But how much of that is a function of the U.S. as opposed to a function of China?
Yeah, it's a good question. I think we're seeing a lot of kind of chat around China at the moment, just given we've had kind of these meetings and the sort of fiscal stimulus that people were hoping for hasn't really come to pass. We've obviously seen the $6 trillion debt swap, which sort of helps put a bit of a floor under sort of some of Chinese assets, but we have still seen kind of Chinese stocks selling off, yuan under pressure. And I was really interested in a story on the terminal this morning about kind of the trade surplus in China heading back towards $1 trillion. And that's really interesting when we do look at China versus the US, because obviously Trump has kind of made a big point in the run-up to the election talking about tariffs and talking about sort of trying to counteract other powers around the world, particularly China, where he's been very harsh from a rhetoric perspective on them. So the fact that you have kind of, these domestic slowing factors in China that they're trying to counter, this issue of the trade imbalance with the US and kind of Trump coming back in and talking again about tariffs as he did in his first term, that really does kind of set up a very interesting picture for sort of risk havens like treasuries. And I think that's going to be a really interesting sort of cross-current, particularly as we think about sort of Trump's domestic policies and how they impact yield, the monetary policy on the Federal Reserve side, but also that kind of haven aspect that treasuries typically play.
We've also been debating the response from Europe to potential Trump tariffs and whether it will have to be monetary because of the fiscal limitations. Do you think, given all of this kind of quite hawkish rhetoric out of the Bank of England last week, that you'll end up seeing the pound strong against the euro because of that gap in monetary policy?
Yeah, I mean, that certainly seems to be what people are talking about at the moment, that the UK, for whatever reason, looks like an island of stability versus kind of elsewhere. You do have much less impact likely on the UK, given it's a services-led economy. So that is really benefiting the pound at the moment.